given your experience here, you'll know the different types of financing as well, right? You're working a lot with different types of lenders. You mentioned a few of them. What type of financing is happening right now in construction lending?
Another good question. So what I love to see is strategic lending. So bundling. You know, you have TV commercials and everyone's bundling everything, whether it's insurance products or communications products or whatever it is. I think lending products can be bundled too. What I mean by that is typically we say, I just want a construction loan. Well, that's wonderful, but what happens after that? You'll find that some lenders appreciate the fact that they're bundling with more permanent financing with a construction loan because it allows a little bit more of a relaxed policy because we know we're going to get the permanent financing anyway. So what is that? That's risk. So construction loans are risky, but they're also very profitable. So and some lenders have in the past been hesitant to go into that market because of that risk. Well, I step in and provide that barrier between the profitability and the risk. So that's what I do. So what do I see? So there are three types of loans out there, or the criteria, the underwriting behind it. The credit availability or credit acceptance of a customer. So their ability and willingness to pay that loan. Their credit risk is one. The other one is an asset-based type of lending to where, what are the assets that are underlying the project? Does the owner of the property own the land behind that? That, in fact, can help reduce the equity requirement, right? So there's the asset-based, and so the credit risk is not so much important anymore, where it used to be when it was on the credit-based financing, right? So the assets will help with that process. And then thirdly, there's the hybrid, where we're seeing both asset-based lending, but combined with the credit history. Therefore, we can see very competitive rates out there because they're more comfortable lending in that way, right? So we have the construction loan, which has typically you'll see a equity portion of, anywhere from 70 to 90% debt to equity. Okay, so the remaining part would be the equity portion of that. So, which leads us to the different types of loans that are out there, right? So we have construction financing, mezzanine financing, and then permanent financing. So if there's an equity requirement for a particular lender, and the owner or the borrower can't seem to reach that percentage equity that needs to be there, they can use something called mezzanine financing or gap financing that would help provide an equity infusion into the project. So it's still debt, but depending on the way it's structured, mezzanine financing covers that gap to where a lender may have an option to convert that financing into an equity portion of it. So, but that's very detailed, and they range across the board in terms of what mezzanine financing really is. But just it's a gap. And then you got the permanent financing, which is the loan, the mortgage itself. So if you've got a lender that has a construction loan, but they know that that loan's going to be now taken out by the mortgage that's owned by that lender, you can see the bundling and how that works in everyone's favor. Mm-hmm.